Europe is facing an energy crisis so big this winter that a severe recession is looking more and more likely by the day, with complete economic collapse even a possibility for some European countries. Today I'll be taking a look at how over-reliance on Russian energy has brought on this major energy crisis in Europe, as well as how this is likely to transition into major economic damage across the continent. So let's first take a closer look at the energy crisis that is taking place in Europe right now. So many of the major gas pipelines in Europe have been shut down since the Russia-Ukraine situation started, including the Nord Stream 1 gas pipeline, which is the largest source of natural gas across Europe. So before the conflict, Russia did supply about 40% of Europe's natural gas, which works out to be around 155 billion cubic meters, and the vast majority of this gas supply was delivered through pipelines. So the breakdown of these major gas pipelines running through Europe means that Europe is now missing a large chunk of their natural gas supply that they would normally be getting, meaning that energy prices have surged a lot due to the supply shortage that is taking place. And it also leaves a major risk of energy blackouts this winter, which could leave many homes and buildings without power for a period of time. Now, this Nord Stream 1 pipeline from Russia to Germany was so important for providing natural gas across all of Europe that a Nord Stream 2 pipeline was built to run alongside it. Now, this project did start in 2011, with the aim being to increase the supply and decrease the price of natural gas into Europe. So this Nord Stream 2 would allow Germany, as well as other European countries as well, to import a higher quantity of Russian natural gas due to the increased transport capacity that this second pipeline would bring. So the project always came with a major risk and downside, which was that it would increase Europe's dependency on Russia for natural gas supplies. So this was a factor that Germany never really placed too much concern about, and the project was allowed to finish anyway. But this Nord Stream 2 pipeline was ultimately finished in September 2021, but it was never turned on, and now fast forward to 2022, and Germany, as well as the rest of Europe, is starting to realise the big mistake that they did make in placing so much reliance on one single country for natural gas, especially considering that this one country is Russia. And the Russia-Ukraine conflict ultimately led to this pipeline never actually getting turned on since it had been completed, and it has now been cancelled indefinitely, which is a major blow to Europe's energy supply in the near future. So with all of these pipes getting shut down, Europe is already suffering from a vastly reduced natural gas supply coming from Russia, but now there is a real risk of Russian natural gas being 100% shut off entirely. Now, this all stems from the European Union proposing a price cap of Russian natural gas, with the European Commission chief saying, "We must cut Russia's revenues, which they will use to finance this atrocious conflict." Now, Russia then responded to this by threatening to cut off Europe entirely from their exports, and they also stated that if Europe is to follow through with this price cap, then they will simply not supply anything to Europe, which means no supply of gas, oil, coal, or heating oil. So previously to this, the G7 group of nations announced a price cap for Russian oil in an attempt to hit Russia's ability to finance the conflict in Ukraine. However, Russia did hit back on this too, by yet again threatening to stop supplying oil to any country that imposes a price cap on Russian oil. Now, this is a complex back and forth situation between Europe and Russia that is likely to continue on into the winter, and nobody really knows where this will end up leading to in the near future, but there is definitely a major risk that entire Russian commodity supplies do get cut off from Europe, which would be likely to inflict a devastating energy shortage on the entire continent. And that is at least until they can find an adequate replacement source for this energy, or they can become more self-sufficient through renewable energy as well. But that's obviously going to take a lot of time and also a lot of money to put into place in order to actually replace the energy they were getting from Russia. So the European Commission had estimated that if we have an average winter, there would be a shortfall of 30 billion cubic meters of gas under normal energy consumption. Now, they have set out a target of reducing natural gas demand by 15% in order to more than offset this shortfall and reduce their natural gas demand by 45 billion cubic meters. Europe is therefore facing a very real prospect of having an energy shortage unless governments work together to help reduce their energy usage to save precious natural gas supplies. Now, this is likely to lead to gas rationing for certain countries like Germany, and it's also going to be a very difficult task to decide who actually gets to use this natural gas and who doesn't. So certain companies are going to be hit harder than others by this rationing policy, which is likely to lead to companies shutting down and people losing their jobs as a result of this. Now, Germany has the largest economy in Europe, and if we see companies shutting down in Germany and people losing their jobs, which leads to a deep recession taking place, then this is not only going to be a very bad thing for Germany, but it's also going to be very bad for many other European countries who suffer from the knock-on effects of Europe's largest economy in Germany going through a crisis. Other countries like the UK have introduced plans to subsidise energy by creating price caps for household electricity usage. Now, this is great for households across the country because it means that powering their homes is more affordable than it would have been in the free market and relieves some of the cost of living pressure on people. However, there are significant costs to this scheme, which may have many negative consequences on the wider economy of the UK. So the price cap comes in at £2,500 as a maximum for average household use, which is significantly lower than the £3,549 it should cost at current market rates. But this £1,049 gap in the price of the energy costs and the price that the consumer is paying is going to be paid by the UK government and is therefore going to be a big toll on the annual budget. So this unforeseen budget expense will therefore need to be run into a budget deficit, which means more debt for the country, or the government will need to find the money from somewhere else by making cuts elsewhere to other areas like education or healthcare, or by increasing taxation in one way or another. So alternatively, they could print new money, but that would obviously contribute more to the out-of-control inflation that is currently being experienced in the UK, and to be honest, most places in the world right now. The UK is likely to not be the only country tackling the energy cost crisis in this way, so any other country that decides to subsidise energy costs will be facing the same problem of deciding the best way to fund it. So this transitions into the recession that Europe is potentially facing and how bad this recession could actually be. So the CEO of Chevron, Mike Wirth, said that he believes that this energy crisis will push Europe into a recession. He says, "I think it will be painful. Certainly prices are already high relative to history. We're already seeing this impact being felt in the European economy, and it's likely Europe goes into a recession." BlackRock also came out and said that they think that Europe will spiral into a severe recession as the shortage in energy supplies is set to spike inflation even higher than it is right now and weigh heavily on Europe's GDP. They added that the European Central Bank isn't acknowledging how it will crush activity further by trying to fight high inflation in our view. We think that the ECB will wake up to this sooner than markets expect, but not before it inevitably faces a severe recession. So this comes off the back of the Eurozone inflation reaching 9.1% in August, causing the European Central Bank to issue its first ever 75 basis point rate hike in order to control inflation. However, analysts do believe that this level of monetary tightening threatens to destroy economic activity in Europe, which is already suffering due to the energy crisis. And then just to add to this as well, top economist Mohamed El-Elrian also agrees that a European recession is all but a done deal in his own words at this point due to the out-of-control energy prices as well as the rapidly rising interest rates. So ultimately, Europe is facing one of their worst ever recessions, mainly as a result of the energy crisis, but also because of a number of other economic factors, some of which being knock-on effects of the energy situation. So with Eurozone inflation being so high and reaching 9.1% last month, it is now facing the prospect of raising interest rates aggressively in the future, while the region simultaneously faces a downturn in economic activity. So the Purchasing Managers Index, or PMI, which is seen as an indicator for economic health, did fall to a 18-month low of 48.9 in August, which is a negative sign, as anything below 50 on this index does indicate a contraction. So the euro has also depreciated quite rapidly over the last year and a half, down over 17% since April 2021, to now being at parity 1-for-1 with the US dollar. So having a weak currency does make it more costly to import goods and services into the country, and this is particularly damaging when there is such a need for energy imports right now. The high market price for energy combined with a depressed currency value is a double whammy for extremely expensive energy costs for any country that is using the euro. Ultimately, many European businesses may need to shut down due to the out-of-control energy costs that they are experiencing right now, and many households will also not be able to afford to heat their own homes without government intervention, which will of course be very costly for governments. Now, people are generally going to have less money to spend in the economy, and there is going to be a decreasing amount of investment taking place within the economy due to high interest rates that are only likely to go even higher in the future. So Europe is seemingly having a worse energy crisis than the US, and also a more out-of-control inflation than the US as well, meaning that they may need to raise interest rates by more than what the US does. And all of this happening simultaneously does mean that it's very possible that Europe does experience a more severe recession than anything that the US does experience in the next year or so. So that is all for today's video. I hope you did find this video interesting as well as informative on the situation that is taking place with the European energy crisis, and also why this could potentially lead to a severe recession for Europe. Obviously, there is still time for European governments to find a solution to this problem, and it may not be as bad as it's looking right now if they can find a good fix. And obviously, it's not out of the question that a ceasefire between Russia and Ukraine could hopefully take place in the next or in the near future, which could potentially lead to more trades taking place between Russia and the West, which could also help to resolve the crisis that is taking place. With that being said though guys, this video is purely based on my own thoughts and opinions, which is based on my own research. It is not financial advice and I'm not a financial advisor. It's for purely entertainment purposes only. If you did enjoy the video though, please be sure to leave a like, as that does help out a lot. Also drop me a comment as well, let me know what your thoughts are on the current situation in Europe and where you think the economy could be heading. I'd be really interested to see that. Also be sure to subscribe as well if you want to see similar videos to this in the future. But apart from that guys, thanks a lot for watching.